Welcome to episode 9 of the Technical Bootcamp. Today we are expanding upon momentum and talking about multi-candle momentum. So, what is this all about? Well, multi-candle momentum is where we take what we learned about individual candle momentum and shift this into context of larger series of candles. So we look at full up and down movements to determine who is in control between buyers and sellers. So we are going to show you how to read the battle between buying and selling using multi-candle momentum, how to determine control from candles in context. So where is the control in this market? Is it on the buy side or the sell side? And how to use this understanding of contextual momentum for deeper market clarity. And with that said, let's jump straight into the video and get learning. In the previous episode of the bootcamp, we talked about individual candle momentum. So we looked at how each candle that forms in the market can determine who is in control, whether it's buyers or sellers, based on the speed and the size of the candle bodies and wicks, and what they're indicating to us in the form of buying and selling pressure. In this class, we are going to elaborate upon this concept and talk about multi-candle momentum, which is where we start to utilize the individual candle information that we found in the first episode and draw that into how we actually look at larger contextual pieces of price action to determine who is in control. Now, this is where momentum really gets applicable because, as we said towards the end of the previous class, this individual candle momentum is of course very valuable, but it isn't going to be what we actually trade off of. When we understand how these candlesticks move and what they show us, we can then draw it into larger context in the market, and we can look at larger pieces of price action, such as the example I've got here, to determine who is in control, which actually leads to the trades that we take. Okay, so there are a few different elements that we need to talk about, and they are going to be, again, we look at the size of movements or size of candles. We look at the speed of movements, and then we look at the bodies and wicks. And we also look at how smooth up or down moves are, okay? So these are the 4 things that we need to go through today. The majority of this, given that it is inside market context, is going to be done on previous charts rather than when I usually do the introductory part at the start. So we're going to head over to the charts in just one moment. But first, let's quickly talk through each of these 4 points. We'll start, first of all, with size. So as we discussed in the previous class, size of candles matters a lot because a large candle like this, for example, shows that the market opened here and then closed here within this given specified period of time, let's say 1 hour. That means that with this being quite a large candle, there was uninterrupted selling all the way from this point at the open, all the way down to here at the close, okay? So that obviously being a large candle, the size of the candle indicates seller control. Now, if we have a small candle like this with an open and close price there, this shows less control. So a small candle shows less decision from the market, all right? Now, if we take a look at this example then, what can we derive? Well, we can first of all look at each of the individual candles and we can see this is a reasonably large candle. But then all of the candles basically in this area, so from here to here, these are all pretty small candles, okay? So this gives us the idea that this isn't really strong momentum. This is just a small sideways chop through. If we then look at the final candle, this one here, we see that the size of this candle is incredibly large. It's actually larger than every other candle previous inside of this range. So the size of this candle being so big in comparison to the previous ones shows a clear shift at this point from seller control into buyer control, okay? So when we bring that into the context of the markets, we are still just looking at the size, but we can compare it to the size of local or recent candles as well. If we have a candle this big in comparison to a bunch of small candles, that can tell us that this may be the point where the control in this market has shifted from the sellers to the buyers, okay? So size of candles, still very relevant. Now the next thing is speed. And what we do here is not gauge the speed of individual candles, but we gauge the speed of up moves and down moves, okay? And then we compare those and see, based on how fast the market is able to move one way or the other, who is likely in control. So if we take a look again at this current phase of price action, from here all the way to here, we see this is a bearish move, okay? Because the market started there and ended there. So this entire phase is a phase of bearish price action. Now, if we see how long this took to come down, assuming that we're looking at a 1 hour chart, for example, this is 1, 2, 3, 4, 5, 6, 7 hours that it took in order for the market to get down to that level, okay? So that's 7 hours of bearish price action. But then if we look at the buying candle, the bullish candle, this is only 1 hour. And this bullish candle has actually covered the same price range. So it's moved the same amount of pips as this entire downward move, except this took 7 times longer. Now, if we think of the implication of that, it simply means that the sellers were seeing resistance from buyers, which is what we see here and here, and they didn't have enough strength to drive this market down in force quickly, right? When we compare that to buyers, we can essentially gauge from this that the buyers are 7 times stronger than the sellers because they've acted 7 times faster, which may, to a degree, as a simplification, mean that there is 7 times more buying pressure coming in here than there is selling pressure on the move down, okay? So size and speed is relevant. We look at size of pretty much individual candles comparative to one another. And then we look at the speed of not individual candles, but full movements. So we look at the down move, the up move, which one was faster and by how much, and how can we derive from that who may be now in control. The next thing, of course, is just bodies and wicks. So of course, small candle bodies show more indecision, large candle bodies show clear control. Small upper wicks or no upper wicks, such as here, show clear buying control or selling control. Wicky candles like this one here and this one here, and pretty much the majority of these in this range, show indecision, and especially on the downside here, we see buyer pushback. So this is showing us buying pressure coming in, and we're seeing momentum against the direction that we obviously are heading in this bearish phase. So bodies and wicks, pretty much just what we covered in the previous class. And then how smooth the movement is. This one is very, very useful. It's very simple, but it's something you might not have considered. So we want to think about how clear, smooth, and simple is a price move in the market, okay? So if we look at the downward move first of all, so from this candle as the low to this candle as the high, this is not particularly a smooth move. It's not a linear move to the downside, okay? What we have here is our first initial selling move, which drives us from the top of this candle to this low. Then we get a pullback here. Then we have another push down towards this low, and then we pull back here, and then we push down to this low. So although it is technically trading to the downside, when we compare this, we see that obviously versus the hello. Now, if we compare that downward move being choppy and seeing buyer control pushing back into the market to the buying move, which obviously it's early days, but we just have this clean drive up, you can see that the buying move is a lot cleaner, okay? Now, obviously this is bigger picture more so, the how smooth the move is, but I'm going to show you kind of what this may look like in a real market. So sometimes, we'll see this on chart examples in a moment, you will have, let's say we have a buying move that is pretty strong. So let's say probably going to look something like this. And then the selling move back down looks more like this, okay? So we see more notable pushback from the buyers on the selling move than we saw from sellers in the buying move. Then when we start to pick up momentum again, we have a buying move that again is rather smooth and clean like this. And then the selling move would be more choppy like this, okay? So from this, basically what we're determining is, well, if we consider just how smooth the movements are and what they actually represent, the buying move shows clear buying control with only a small bit of exhaustion, which is completely natural in a market. That shows buyers here are very strong. So we have strong buyers and weak sellers, okay? So then on the down move, we see a selling move that is pushed back pretty notably by the buyers, right? So the choppier a market is and the larger the corrective moves are, the more this can potentially imply that buyers are going to take control of the market again. Because one, we have a smooth buying move, and two, we're seeing pushback from buyers every time we create a new low. And the pushback obviously is more significant with the larger pullback movements. So this move is not linear and it is a choppy move down. And the real big core thing, I know I repeat myself a few times, but is just simply seeing that pushback from the opposing party, okay? So if you see these large pullback movements, you have to read into what these are telling you, and they're just simply telling you that buyers are stepping back in and taking over control of this market a little bit more. So then again, we lead into a very strong bullish move. This is kind of what we would anticipate after seeing price action like this and price action like this. And then of course, if we want to see how strong this move may be on a continuation, well, again, the pullback movement has pushback from buyers consistently and is a much choppier move than the smooth runs up. So that may tell us again, soon the buyers are going to take control, and there we go, we get a smooth run up again. So you're going to see what this looks like on the charts, but that is basically what we're talking about with how smooth movement is. The less pushback there is from the opposing party, such as this movement here with only a few small pullbacks, the stronger that movement is going to be and the stronger that side of the market will be to trade on. The larger the pushbacks and the more frequent the pushbacks, then the weaker that's going to be. And this can actually be indication that soon providing the market is in a bullish context and has had strong buying previously. Strong buying is likely to step in again. Same goes for a sell idea. If we got strong uninterrupted selling and we're seeing pushback from sellers on the buy movement, that simply shows that sellers are a lot stronger than the buyers, okay? And that leads us into further continued downward moves. So those are the 4 core elements then. Just to quickly run through those, let's plot that on. We have a movement like this, and then we have a rally. So what do we derive from this information? First of all, size of candles. Well, this movement likely to have strong, large candles in. This movement being slower and choppier is likely to have smaller, more indecisive candles in. More wicks as well with the pushback up and down. And then we have another drive like this. And then what else can we derive from it? The speed of the moves. Okay, so if we plot on the speed of this move from this low to this high, only takes a fraction of the time that it would take the market to get from this high to this low. So therefore we anticipate the next movement will be a fast move, which again, as you can see, it was. So that's speed and size. Bodies and wicks, of course, examples, so I can't show you, but you get the idea. Smaller, indecisive, wickier candles here, stronger, more clear control candles there. And then the smoothness of the movements, obviously these upward moves are a lot smoother than the downward move, so therefore we would anticipate continued upside. So those are the 4 core elements to look at. Now let's head over to the chart and look at these in action. Okay, just a quick interruption from the bootcamp for a second. What you're learning here in this bootcamp about technical analysis is necessary to become a good trader. But technicals alone are not sufficient to get you to where you want to go. See, it's usually not the things that you see on the charts that actually have you stuck. Traders get stuck because of habits, risk behavior, decision-making under pressure, and self-sabotage patterns that form that simply don't show up on the charts. So I've created a small and easy to digest class. It's around 15 minutes long and it breaks down all of the reasons that you're losing and struggling to win that you probably just haven't seen yet. Once you've completed this class, head over to the link in the description, click the top link and you'll be able to watch this class. It's totally free and it might change the game for you. So let's go back to the bootcamp. Okay, so we're going to take a look at this market from this point onwards and consider all of the momentum factors that we've covered so far. So first, this upward move. We can see this is a clear buyer control move. The 4 factors we're going to go through, of course, the speed of the candles, the size of the candles, how smooth the movement is, and then the candle bodies wicks. So if we look at that first move, we can see that it is, first of all, size of candles, very big, nice. We have large candle bodies here. We have a small exhaustion. Then we have another run of large candle bodies here with little wicks, only small wicks around them, okay? So we're seeing clear buyer intent from those candles. Then if we look at the speed of the movement, from the very low of the move, which is just here, to the high, we basically took that much time. I'm not going to sit and make you listen to me count each individual candle, but as a general move, the movement is that big, okay? How smooth is the movement? Well, we don't have any of that seller pushback. We're not looking at a movement like this. We have that clean drive up, small exhaustion, clean drive up, and then we exhaust at the top. So it's a smooth movement. So we've got a fast, large candle, smooth movement, and then considering the candle bodies and wicks, obviously many, many more bullish candles than bearish candles. So you can see more blue candles than gray candles. There's only 2 gray candles within this movement. And we have many more control candles than indecision candles. And the control candles we do have are showing considerably larger confirmed price action than rejected price action, okay? So this movement, based on the 4 factors we consider, is a bullish movement. We see clear buying control. Now let's move on to the corrective move. So you can see already the corrective move is, first of all, a lot slower. So we see the movement took, I think, about the same amount of time, except it didn't even cover 50% of the move, all right? So if we mark the high to the low, it's a little bit less time, but if you think about the ground covered in that time, it's obviously considerably lower. We only made less than a 50% retracement in almost the same amount of time. So speed-wise, obviously you could say, well, it took less time, but it took less time to cover a lot less ground. So realistically, if this was to pull all the way back to the 100% mark, it would be double this, right? It would be a considerably longer period of time than it took for us to rally initially. So speed, that's actually kind of slow in comparison to previous. Size of candles, well, we do start off with some reasonably sized bearish candles, but then you can see that kind of starts to slow down. And although we do have some good bearish candles in this mix, we also have the problem that there is some clear buying candles as well with little rejection. So we have this one here, and then we have this one here, and then we have these 2 here as well. So although the size of the bearish candles is reasonable, there's just a lot of indecision and some reasonably sized bullish candles in the mix as well. Okay. Now, how smooth is this movement? Well, if we compare it to the buying movement, which started off by basically consolidating a little, then rallying, pulling back, and then rallying all the way to the high, this one looks nothing like that. We pull back, trade into here, then we have pushback, pull back to here, we have pushback, pull down to here, we have pushback, and then we pull down to here. So you can see this move is a lot less linear and a lot less smooth than the buying move, okay? And then considering the candle bodies and wicks, of course, as we've said, we've got notable wicks on the downside here and here, which is buyer pushback. We have candle bodies closing pretty strong bullish, which is of course, again, buyer pushback. And then in the downward movements, even through just one standard down move, we've got multiple indecision candles with equal wicks either side, and we see that repeat throughout. So this one is not that fast. The candles are not that large. It's not very smooth, and the bodies and wicks are showing a notable amount of indecision. So this one would basically be weak seller control. Okay, so we'll mark them as these instead of just bullish bearish because it gets the point across. So this is strong buyer control. Now this weak seller control, we mark it as that because it is still control from sellers, right? We are absolutely seeing the sellers in control of this market at this time, but they're not very strong, okay? There is still buying taking place, which is pushing back. So yeah, it's a weak movement controlled by sellers, therefore not really something we want to look to sell into unless we would start to see more clear seller control, okay? So then the upward move, okay, let's look from this low to this high. Of course, as we can see, this again isn't the fastest movement. We retrace pretty much all the ground of the downward move in about the same amount of time. So this isn't the fastest move ever. If we want to run this to actually where the structure breaks, which would be the ideal thing to do, we would extend this movement a little bit further. So we'd be looking to here now. And again, this buying phase is not that fast, but it is showing pretty good buyer control if we take a look at the candles we've got. So we have impulsive bullish candles, then we have an attempt to push back from sellers, but there are wicks here, which shows clear buying control pushing back into the market, right? Then we have a phase of clear buying control. Basically, the pushbacks that we get here are not as strong as the pushbacks that we were getting on the buy side here. So here we have like a selling move, but then a clear buying move that pushes back like 50% plus of the move. Here we have a clear buying move, and then the selling move is not very clear, and these wick rejections are showing continued buying pressure stepping in. That's then followed by, again, more bullish candles and another phase where there's wicks beneath showing clear buying pressure coming in and a failure to retrace even 50% of that small upward leg. So this move's looking pretty good. Now this is kind of medium buyer control until we get to the end and we see that real big push up there. That of course shows some pretty clear buying control. But again, we've made a new high, we've covered more ground. It's not the fastest, it's not the cleanest. This isn't like a super high confidence, I must buy this market phase, but it does show when we look at that smoothness, the size of the candles, the speed of the movement, and how the candles, bodies and wicks are formed. We do see that kind of medium buyer control basically, okay? So you can basically see from this movement, buying control here is stronger than the seller control was in the previous downward move, the correction that we got. So that's kind of medium buyer control, okay? Now let's take a look at the following move. We basically moved into consolidation. So from this point through to here, basically, we can draw it up to this high. We don't really have a whole lot going on. It's sideways, then it's down, but then it's back up, then it's down, then it's back up, then it's down. So this is a bit of an indecision phase, all right? So we just pretty much consider this as indecisive. Now, what this would mean is if I was looking at trading this in a real market, so if this is a market that I was in and I was trying to get sense of, I wouldn't actually take a trade anywhere in this range, right? I wouldn't really gain much from this information. Obviously, we can see that we do have good buyer control there, good buyer control there before we lead into this new up phase, but it is a more indecisive phase, okay? So we have strong buyer control and then weak seller control. Then we have kind of medium buyer control into indecision. Then what we've just got at the end, if we go from low to high, is again very clear strong buyer control. This is a fast move. The candle bodies are pretty much all bullish, okay? So we've got bullish, 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 bullish there, bullish there. We only have two tiny little pullbacks. And as we see from the pullbacks as well, we are getting buying momentum coming in with these bullish wicks. So we're in a situation here where this is pretty clear, strong buying control. And that is, of course, then likely, obviously we are forecasting, followed by a weak seller control into medium or strong buyer control again. All right. So you can see how we've actually read into each of the individual candles and then contextualized it into the bigger picture. Clear buying control, we have way more bullish candles than bearish candles, little to no interruption from sellers. Then we have a fair mix of bearish and bullish candles and some pushbacks from the buyers on the corrective move. Then again here we have way more bullish than bearish candles, but we do still have a kind of slower movement and a bit more indecision. And then this phase is really just a sideways move of clear buying and selling combat, essentially, where we haven't really made any movements until we reach here, where we have probably one of the most bullish looking phases in this market at the moment. We've got loads of buying candles, almost no bearish candles, and even the reversals that we get, the exhaustions we get, are alleviated by buyers instantly, with wick rejections pushing the market back higher. So from a phase of strong buyer control, we would then anticipate to see some form of weak seller control to lead into strong buyer control again. Okay, that's how we would generally forecast it. So we're going to run it forward a little bit and we'll see where we get to. Let me speed this up because it's super slow. We have a selling move, pushback from buyers, selling move, pushback from buyers, selling movement, pushback from buyers. Now you can see how strong these pushbacks are, okay? This movement, if we compare it to the one previous, from the high to the low here, we covered less ground than buyers did through this phase. And it took, I'm going to say, probably about 3.5 times as long as it took the buyers to get from here to here, just to get down to about the 70%, 75% retracement point, okay? So this is way slower than the previous buyer control move that we saw. It's also way less smooth because we've got pushback continually, right? We're seeing these buying candles pushing back in, which drive back like 50% plus of each of the bearish moves we get. We see the wick projections on the downside showing that buyer intent as well. So it's not very smooth, it's not very fast. Candle bodies, well, the candle bodies on the downside, not that great through this movement, to be honest. These ones are okay, but then they're met by equally large buying candles as well. So this is a small candle, wicky, slow, and not very smooth movement. That is, of course, going to show us weak seller control again. Okay, so what would we anticipate from a phase of weak seller control? From this, we would anticipate a strong buying movement once the buyers are able to step in and give us some force. All right, as we see, we get from here pretty clear buying control, bit slow, but then we lead into more buyer control. And I would say this phase realistically is just a medium buyer control phase, but it's read pretty well out the back of this. Again, if you take a look at what we were actually doing on these movements up, we have slow chop, fast push back up, slow chop, fast push back up. Okay, so you can see that is a continual pattern. And then we have a drive down and we slowly gain ground to the upside there where we're not pulling to the downside and we're not really seeing any notable pushback from the sellers. Well, except for this little phase here. Okay, but even then, wick rejections, wick rejections, wick rejections every time we push down, showing buyer intent, right? So I think this should be starting to make some pretty good sense to you now. How we identify the control of buyers or sellers based on those 4 elements. The speed of the movements, the size of the candles, how smooth the movements are, whether they are linear or choppy, so whether it looks like this or like this. And then, of course, the formation of the candle bodies and wicks. Are there more bullish candles than bearish candles? Are the bullish or bearish candles larger? Do they have larger wicks? You know, how is the price forming? And what is that information giving us? And that is how you see it. And obviously, through this phase where we see clear buyer control, we know the right side of the market to be on is the buy side. So we take advantage of the following weak seller control to identify opportunities to buy. We see medium buyer control, not as great, but we want to wait for clear, strong buyer control again. And then if we see weak seller control, we start to join the market in on the buy side again. Okay, so that is an example of how we read momentum in a market. Would you say has more clear control over the market, buyers or sellers? Well, if you said buyers, in this instance, you would be so far correct. So if we take a look at how long it took the market to get from the very low to the very high, we see that it moved this much within this amount of time. If we cross that over to how long the selling move took to go from the very high to where it currently is, which, by the way, is the very low, okay, before a new impulsive move, it took longer to cover less ground. So we probably covered about 4/5 of the move, but it took a longer period of time by about 50% longer, okay? Maybe a little bit less than that, but regardless, it took longer to go a lesser distance. If we then consider the clear control, so the candles in the move and the size of the candles as well, this is where it really shines through and becomes obvious in this example. So not only was this move larger and faster, but if we look at how this move was made up, we have massive runs of consistent bullish candles with little to no wicks. And then when we see these exhaustion cycles, so the pullbacks, they are very, very small. We have a little pullback like that, Then we have another clear control move. Then we have a notable pullback, but still nothing in comparison to the upward moves. It's less than 50% of the previous leg of price from there to there. Then this completely buyer-dominated movement here, which is just bullish candle after bullish candle, no bearish candles from this point all the way up to here. And all of these are incredibly strong, long candle bodies and little to no wicks at the tops, as you can see. Then the pullback we have is tiny, less than about 20% of the full move. And then we have another uninterrupted buying move. So you can see, based on the size of the candles and the formation here with all of these candles being overwhelmingly bullish in comparison to the bearish candles, that this is a very strong buying move. If we compare that to what we see on the downside, yes, we start off with some clear downward control, which is nice, but we soon start to move into this kind of choppy sideways movement where we're getting these consistent pushbacks from buyers, right? So here on the buying move, we have like pushback 1, which is almost negligible, pushback 2, pushback 3, pushback 4. Through this movement, we've only gotten this far down and we've already had pushback 1, pushback 2, pushback 3, and then there is pushback number 4 there. We're seeing a lot more pushback, a lot more consolidation, a lot more indecision, and obviously it's a lot less of a smooth move. And if we compare the count, right, so as we said, this move, all bullish candles, all bullish candles, all bullish candles, all bullish candles, only a few gray bearish candles in here. This one is like a 50-50 split. The bearish candles are larger than the bullish candles, but we see many, many bullish candles pushing back into the market here, which shows buyers are still kicking, essentially. All right. So from this movement where we have a fast, strong, clear buyer-dominated move, and then a slower, weaker, more indecisive seller-dominated move, we can expect and anticipate the next movement is generally going to be a buying phase to take the market higher. Okay. And of course, we use this in conjunction with the concepts that we've learned throughout the bootcamp so far, but this standing alone is a very useful concept. Okay. Now here we have the next move. What do we see again? Well, it's pretty much a mirror image of the first run. This one actually has moved faster. So from the low to the high here, we'll see if this move starts to pull back first before we mark the top. See, it's still going. See, so it's even bigger than we initially thought. So from there to the top is a very large move, almost twice the size of the pullback move. And it happened in less time. So this market is actually just getting progressively more bullish at this instance, okay? Also, look at the pushbacks, almost none. This is practically a linear move from here to here, right? There's not much averaging out that needs to be done. Whereas a movement linear from here to here, we got a lot of chop and a lot of returning to the mean essentially throughout. This has got one pushback there, and then we have really 2, 3, 4 tiny pushbacks from the market. And then there's maybe the one at the bottom you can count as well. So we have 5 pushbacks, but every one of these is like under 50% of the move. The majority are like 30% of the bullish movements or less. So this is a very clear buyer-dominated market. Again, what do we see? Loads of bullish candles, not many bearish candles. Loads of bullish candles, not many bearish candles. So when we're seeing the buyer control phases, so each of these smaller individual legs, like this run here, this is just blue, 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 blue. There is no gray in here. This is just clear buyer control, no pushback from sellers. And then when we do get those corrective moves, they're tiny and they are immediately met by strong buying again. So with this in mind, our next idea would be to anticipate we're probably going to get that kind of slower, choppier sideways pullback again, okay? If we get that, that can set us up to understand that buyers are clearly in control and we should be looking for buys when the market starts to shift that way, okay? So now that we've started to build some strength here, we can look at the bearish movement, which would be from the high to the low. And as you can see, this move took a little bit less time than the previous one. However, this retracement is probably around 35%. We've only made about 1/3 of a retracement here in almost the same amount of time, okay? So when we compare how much this has moved to how long it's taken in comparison to how much this moved and how long that took, this is obviously a much weaker movement. And again, lots of pushback. We're seeing a good mix of blue and gray candles. And this pushback here is really not a great sign for sellers because the buyers were able to take it all the way up, which is actually over 50% of the size of the entire range up to that point. So obviously we see buyers still alive in this market, and then we would anticipate once the movement comes to a close, we would be looking for a new bullish push to take us to new highs, okay? So there you go. You can see how we've used momentum again. This time with the bullish move up, we are starting to lose a bit of steam. It's still bullish, but this could be where we start to think, okay, this market is weakening a little bit in comparison to how it was moving back here and back here. So then obviously if you got bearish signs out of this and there was strong seller control coming in, then that would set up new moves. But you understand what we're doing here, identifying speed of moves, size of candles, and how these candles or movements are formed, whether they're majority bullish, majority bearish, how big the pullbacks are, the pushbacks, the corrective moves, and you can gauge from that a lot of information as to what is likely to happen next in the market. So that is a rundown of multi-candle momentum. You're looking for the speed, the size, candle formation, and how smooth those movements are, okay? And with this information, you'll have a lot more clarity around the market you're trading. You'll know if a pattern aligns but the momentum isn't looking good, it's best to stay out. And you'll know if a pattern aligns and the market is looking incredibly strong in your direction, then you've got more clarity to get in, okay? So this is a very useful concept to understand. I suggest you go and backtest and test this out. All you need to do is go to a chart, click it back somewhere, start reading that structural movement and see, okay, who is in control? That's what we're always looking to read. Are the buyers in control? Are the sellers in control? That is always what we want to know in the market, and that is what momentum helps us to do so well. So with that in mind, hit the link in the description to watch the trading diagnosis class where we talk about some things that are more behind the scenes and off the charts, but still incredibly valuable to help you understand how to get ahead in trading. And with that, I will see you in the next episode.